Let's start by looking at what happens when someone invests in a house. If you follow that circle from number 1, household savings and resources are spent on an asset that is not a consumable. Number 2, it creates a long-term housing investment for a family. Number 3, it houses many more households in that society. Fourth, often that house generates regular escalating household income from rental or from businesses that are undertaken within that household. Fifth, economic value is added to the economy during construction. Sixth, it stimulates upstream economic sectors, and I'll get back to that now. Seventh, it creates a fixed capital engine of the economy that continues to grow. A house is a long-term asset that builds and continues to build as families grow with them. Number 8, it stimulates the demand for other linked goods and services to housing. Security, gardening services, all sorts of other furniture industries, electronics, etc. 9, government services and taxation is stimulated if it is managed correctly. The more houses, the more revenue, the more revenue, the more houses. And 10th, it creates a base for further household investment because housing investment is never complete. Any household will continue to look at improving either the house they have or moving themselves to a different location, to a different type of house as they grow along with the house. We then need to start looking at this housing economic value chain that is very important and has been mentioned a lot here. At CAF, we look very specifically at the economic value chain rather than the supply value chain of housing. So we're looking here at what are the inputs into housing from the left-hand side of the slide, from the primary and the manufacturing and the tertiary or services sectors of the economy. What then do we add value to through labor and through the use of capital and materials and skills and intellect, and as well as what happens in terms of the taxes that are received from government and the incentives and taxes that are given by government to housing. And all of that creates a domestic supply of housing which then needs to be matched to the demands that households have. And ultimately, that leads either to households paying for housing through rental or households buying and adding housing to the fixed capital stock of the assets that build the Nigerian economy. So, what is this housing economy we're talking about? In residential construction alone, we're talking about a domestic production of 10.5 million US dollars, which is broken down into 10.5 billion US dollars, broken into 6.1 billion of gross value added and 4.4 billion of intermediate inputs coming from other sectors of the economy. So we've heard this many times over the last 2 days. When you build houses, you build other parts of the economy. And this is absolute proof of that fact, that the house is the outcome, the winner is the economy. But that's not all. If you look at the rental sector, it is even bigger in Nigeria. So at the moment, we're looking at 16.5 billion US dollars worth of rental turnover and value in the Nigerian economy. If we add those together, we're therefore looking at $27 billion industry in housing rental and housing construction in Nigeria in 2018. Housing builds economies, and economies build housing. We cannot separate these two, as we've heard a lot over the last 2 days. There are some other issues that Nigerians need to think about. What are we going to do with this incomplete, abandoned, and vacant formal stock? I'm going to put a number to it, and I have absolutely no basis for this number whatsoever. But I'm going to say that looking at this from Google Earth down on Abuja, 10% of all capital invested in housing is invested in housing that is not occupied. It is not complete, it is vacant sites, or it is vacant because no one is able to afford it. We need to reimagine that housing stock in order to get that asset working in the economy again. We've heard a lot about the income triangle and household incomes across Nigeria. That's the way we have seen it in a number of ways, in a number of slides over the last 2 days. I'm going to put some numbers to that with the best available information that I can find on the Nigerian sector at the moment. On the left-hand side, you will see household incomes, and I've made it very simple. $1,000, $2,000, and $3,000 per month, and then at the bottom, $500, $250. If we look at the income profile, it's actually not quite a triangle at all. It looks something quite different to that. If we then start massaging those numbers into something that looks a bit more sensible, please go to the next slide. That's what we see. On the left-hand side, we have rural houses, 100 million rural Nigerians. On the right-hand side, we have urban, another 100 million Nigerians, roughly 20 million, 22 million households. And that bottom end indicates the vast majority of households that sit below $2,000 per month, and in fact, a whole lot lower. What is also critical is that rural housing has a much lower income profile than urban housing. And there is, in fact, a third economy in Nigeria that we need to start looking at: rural, urban, and metropolitan or large areas, because they have fundamentally different income curves, as you'll see in a later diagram. So let's then look at tenure. If we look at the urban side, which is where I'm going to be focusing, you will see that at the moment we have just strayed into 50% of urban Nigerians renting. Now that is probably too much in terms of the discussion we had earlier, but we also have 45% of urban Nigerians currently who own. What they own is not as clear. They own some type of land and some type of housing. But that is nonetheless a base, not only for their own housing, but also for the production of housing for the rental economy. And that is going to be one of the major drivers of Nigeria's housing economy going forward, in collaboration with the more formal sector, which is above the red line. That is a line that CAF calculates that says the lowest house affordable at the moment being produced in the Nigerian economy in 2018 was a 5 million naira house, affordable to someone earning roughly $2,500 a month. That's the lowest we've got. And we've still got this entire sector down here to start looking at. So what I'm starting to do on the right-hand side is to start indicating where those households are currently living. What are the conditions that they're currently living in, and how do we need to start changing that right-hand side to look different? What we see in Lagos is potentially the horrific future of urban Nigeria unless we make a big impact. On the left-hand side, we look at the type of housing that people are living in. The green is single rooms that are rented or lived in accommodation. And the yellow on the right are the number of urban Lagos residents who rent. So what we're talking about is half of Lagos households living in a single room and paying rent to a landlord, and another 25% renting some type of other housing on the housing market. Now, I think we would all agree that that is not the outcome that we would like to see for urban Nigeria generally. So we've got to start thinking more innovatively about what we do to change that pattern. What's going to happen? Who are the households we're housing? Larger families become smaller households when they urbanize. Single people move into towns, couples get married, people have a single child, single parents have a single child. We need to think differently about what a household is as our African cities urbanize further. Large houses become small living spaces. The bungalow, the three-story, 5-room bungalow is pretty much a thing of the past. We need to start thinking about more pragmatic solutions to the housing crisis. Ownership becomes rental. The question is, how much are we willing to accept rental is going to be the way that it drives the economy. Land cost is the second highest in Nigeria, a major issue for affordability. And we see that statutory and professional costs are the major drivers there. The highest infrastructure costs of those four capitals is in Lagos. And that is a key issue here about how infrastructure is provided. Our costs do include for full servicing of water and sanitation and electricity, however they are provided. The highest labor costs, 63% higher than South Africa and double Rwanda. And this is not new. So materials are actually cost effective in terms of most of African cities we see. But there is something going on in the Nigerian labor market which has to do with the lack of skills and the level of affordability for skills which is extremely high. Nigeria has the highest other costs in terms of finance and holding costs, and we put that down to very high exchange rates, very long project tenures in terms of going from foundations to completion, and the inability to actually access finance, which pushes up the total costs. The lowest VAT rate, probably in most of Africa, which has a major impact on what people pay for housing. If you look at the graphs, you will see that that makes a significant difference to the affordability. What we've done in South Africa now is costed 18 different products that exist in the South African market on the same basis that we've used for that housing cost benchmarking. The red arrow indicates the 55 square meter basic house that CAF has used to benchmark housing across the continent. The red arrow itself indicates the difference between the South African cost and the Nigerian cost in Lagos. So the first thing we have to do is we've been talking about reducing the overall cost of building that same house. Bear in mind that over 50% of the cost of a house in any city in Africa is not construction cost. It is land and financing and infrastructure and holding and other costs. So those are the costs we need to work at, as well as the building materials, which we've heard quite a lot about. And we need to bear in mind that the housing is not necessarily always a government or a private sector function. It is something that people for centuries have done themselves, given the right opportunities and access to materials. So this is the message that I wanted to leave you with, that there are opportunities for us to start driving housing in a different way. But what we need to think about is a different type, a different modality, and different levels of affordability for those different types of markets within Nigeria.